What is going on, everybody, and welcome to another weekly update. And in this video, we are giving you a state of the market, some events that are coming up this week, and some stock picks for February 28th, 2022. So if that sounds like something you're interested in, remember to subscribe and like this video. That way it can please the algorithm and get more people prepared for the week ahead and for each and every day. I also do put out a video to keep you updated on what is going on in the current market. So let's get started. As far as state of the market, I'll go ahead and put this up here real quick. Um, Upcoming earnings, there are earnings still going on, but I'll be honest, most of the earnings are pretty much done from this point. If there are any other earnings or any other plays during the week, just be mindful that I will typically update you on the daily updates, which I put out Monday through Thursday to get you prepared essentially through the next day coming. But as far as the events this week, we got the Beige Book on Wednesday. There is a lot of CPI data and stuff that's coming out. Again, none of that stuff, I think you'll get small movement from that stuff, but none of it really matters to this point. We're really just waiting on the Fed, which is on the 16th. What are they going to do as far as rates now that we got the Ukraine and Russia event that is currently going on? We need to determine if the Fed is going to push back any kind of rate raises. Are they going to actually just stop the bond buying at this point and just kick the can down the road as far as rate increases? We have to see on that. Or are they going to start getting very hawkish and start taking a more aggressive approach to this whole case on inflation? But we'll have to see. The gauges that we've gotten essentially have said that some action needed to be taken, yet nothing has been taken. So it's really not our choice, obviously. We have to see what they're going to do and how the market digests it. That's the most important thing. Again, something I've always said is your opinion, my opinion do not matter. What matters is the market's opinion. So we have to see. But this again, the events this week, Beige Book will be important. Again, it's going to lead up to that meeting. So I'll give us some insight into that meeting and what they plan on doing. So the market might be pretty flat going into Wednesday. I don't actually expect that. I think Monday might be some fireworks, and then come Tuesday, Wednesday, we might get a little bit more of a flat movement. So we have to see. Watch list: Tesla, Google, UPST, Square, ASML, LRCX, and Roblox. So let's get into the state of the market. Right now, the biggest headline, as everybody knows, is Russia, Ukraine. There's a lot going on there. There's a lot of sanctions placed on Russia from the U.S. to this point. Last I've heard, NATO. Now I'm making this video on Saturday morning, so just be mindful of that. There's a lot more that can change over the weekend. This is why I provide morning calls typically, and then I'll do nightly videos to help you kind of understand, because stuff is changing very quickly in this marketplace, and everything is news oriented. But you have to realize that if news becomes the same news, the market will get numb to it, and the market will ignore it and start pushing up. So just be mindful of that. And this is why the market isn't completely selling off on news from Russia and Ukraine. Every bombing or incident in Ukraine is not affecting the market, because the market is used to it. When the market gets used to news or information, it is going to ignore it. It's going to get numb to it and start pushing. So just be mindful of that. And realize that the stock market isn't what is going on in the world. It is more so, it's obviously business oriented. So just be mindful of that. But as far as this week, again, just the beige book. Technical wise, we are in an interesting spot. We're in an interesting spot in which we could get rejected pretty hard here. We are coming into a trend, and we do have a lot of daily support that's all been kind of wound up in this one spot. So you're looking at that essentially that 4,400 mark. I thought we were actually going to hit this on Friday and get rejected, but what more than likely is going to happen is we're going to hit this and then consolidate until possibly Wednesday. Wednesday could possibly break us out of this wedge. Uh, I don't know if Wednesday is going to be enough to break us out or push us down again. The Fed, the whole thing with the Fed is interesting. I'm hearing a lot of different things about them not coming in with even 50 basis points at this point, which, if that is true, could actually possibly gap us over this trend and start pushing us back up again, because we have priced in a 50, at least a 50-point basis move. But if that price in is correct, or if it comes in lower than that, that could be actually a bullish signal and start pushing us up. But if it comes in more than that, that will obviously send us down. Of course, in my mind, we've already corrected almost 15% for essentially top. For essentially the top to that last push down that we've had with the Russia-Ukraine stuff that's been going on. That's almost essentially corrected as 15%. And so that being said, anytime we hit correction territory is close to a reversal. It's not saying it will reverse right away, but just know that it's from that point, and at any time it can reverse. So we're in that area essentially where if you're in long-term holding, it's a good time to be slowly buying. It's not saying it's going to be a complete reversal. We can still always sell. It's always a possibility. Be mindful of that. So if you're a long-term buying, again, this is not financial advice, but you have to be mindful. If you want prices like this, they aren't going to stay like this forever. I believe the rest of the back half of the year is going to be very bullish. So just be mindful of that. Again, there are other events that could occur. That's always a possibility in the stock market. So you have to be mindful of that. But if you are coming into the market with 5-10 year expectation, then buying at these prices, you're not going to get these prices all the time. So just be mindful of that. The last time we had prices like this was during the beginning of the pandemic. So just be mindful of that. So now is a good time to be buying for long-term holds. So nonetheless, the markets. So it's going to be interesting this week. I think ultimately we're still waiting on the Fed. Again, if anything more escalates with the Russia stuff, it has to be new. And the only new aspect of that is if Putin really escalates this, or if China gets involved. If China gets involved, then this could change, which on Friday, China was actually, it looked like they were against Russia, which is quite interesting. But the article, I mean, a lot of stuff we're getting there is really back and forth. So it's unless China actually takes action against Russia, I don't really see us starting to sell more from this point. Again, we got almost 15% now. We did hit off a monthly support, so that's something to keep in mind too. Technical wise, we hit off a really strong support. That's why you're seeing this massive push up. People are like, wow, well, the stuff going on with Ukraine and everything. Why is the market jumping? Technical wise, we hit a very strong support. So the 20 EMA monthly, which is something we haven't seen in almost a year and a half. So when you hit these supports, the first bounce, something I've always said, the first bounce is going to be a big bounce. And that's what we're seeing. Now we're coming into some major resistance again at the 4,400 mark. So are we going to reject off of here? I think it's going to take the beige book to kind of determine if that's going to allow us to break out. If we do break out, you're going to see a big push. I've talked about a rally that is coming. Is it going to come before the FOMC meeting? I think it could happen. I don't think we're going to hit all-time highs. I definitely do not think we're going to hit all-time highs till we understand what is going on with rate raises. Now, when we realize what's going on with rate raises, we might just make it up to that 45, 90 mark, and then might continue to chop until we understand what's going on with rate raises. Again, it all depends on the market digestion. We can come up with a thesis on to what they're going to do. I think that's important for everybody, not to just to listen to me or to other people, but to come up with your own thesis and gather as much information as you can and develop a thesis for each and every day, because it will change. Long-term thesis, I'm very much a perma bull, but also understand that that events, daily events, can change the temporary sway of things. And then just be mindful, if you want, if things are going to reverse, they need a couple of days of reversal, not just a major pop like this. But that is a good sign for these strong bounces like this. It's a very good sign that buyers are there. When you get weak bounces, you do not have buyers. So just be mindful of that. So again, SPX looking good coming into Wednesday. Again, that's just worry concern. I think we're really reversing at some point here. I'm feeling that we're going to reverse here. Again, as long as no new information, no new news is coming out, I think we should be fine as far as Bitcoin is concerned. Still at a good point. Again, I'm not really concerned about Bitcoin unless it breaks that 32K mark, but I'm really thinking this 30 mark might around this 32 to 30K mark is going to be the new base for Bitcoin. Again, that has to be tested. So far, it's been working. That thesis has been working, but we have to see. Again, if we get some good positive news, again, cryptocurrency is mass adoption point right now. We're seeing a lot of it in big companies. I think the 30K might be the new base, but we have to see. I think we need some positive catalysts. We need things with Russia and Ukraine to settle down, and we need some form of information when it comes to the rate raise. When that happens, I think Bitcoin will start heading back up as well, essentially in parallel with the market. So picks for Monday. First one we got is a Tesla. I know it's quite winded there, but there's a lot of stuff that's going on right now. There's a lot of events that need to be said, so just be mindful of that. Tesla actually looks a lot like the market in general. We are retesting this this 820 mark. You are retesting this from the bottom now. You have to be careful with Tesla here, because the first thing, if any bad news comes about inflation or rate raises, Tesla's going to be one of the first ones to be hit. Tesla and Google seem to be leading the pack along with Amazon. If anything happens with inflation or big rate increases, your big companies are going to be hit. So these companies will sell off very quickly when that happens. They are also some of the big companies that recover quickly. That's why I like playing them. When they get to key levels like monthly, we got a nice 100-point pop. I did catch this. Being said, though, I have been light because of the fact that there's a lot of uncertainty, and I talk about this. You can't go heavy in this unless you're long term holding these things. Expect these things that you believe in the fundamentals of the company, and then and hold through these periods, and not be slowly buying in. Don't be just buying in all at one time. So again, that's not financial advice, but just saying. So Tesla looking good. It needs to break the wedge just like the market does. And again, we have a lot of resistance here. So just be mindful of that. I think possibly the beige book could break us over this. Again, I don't know. The individual stocks have been beaten down so bad. Even from the high, even Tesla, essentially one of your best stocks here. Oops, that's the wrong one here. Even your best stock is taking a 43% chop. So you're not going to get that every single day. Be mindful of that. And that's what I'm talking about. For long term, you should be slowly, I think at this point, you should be slowly buying in. Again, you should be averaging down on times like this. Typically, you want a higher high or higher low before you start actually the buy-in for correction. But we've getting 50% discounts on some really great companies. And just be mindful if you're looking 5 to 10 years, now is definitely time to be buying. And again, I do believe the back half of the year is going to be very strong. But daily, we're actually wedging here, which is something that is a very positive. That means there's actually going to be a huge move here on Tesla. I'm actually probably going to start buying calls here with a couple of months out because of this. That's a very positive sign. I do like that. This is one of my favorite plays. This descending wedge has some incredible moves that come out of this thing, especially on the daily. The higher time frames you go, the bigger the move is going to be. So just be mindful of that. All we need is one positive sentiment, and I think this market's really going to start ripping back up. So if you are not, again, if you are not buying now, I think you may regret it by the end of the year. Just saying, and it is not financial advice. Again, Tesla looks fantastic coming up, so we want to watch this wedge break. Again, it could still go down, but for me, I think Tesla is definitely one of the ones I want to watch this week and keep on watch. Google. Google has been quite choppy, but it has definitely been holding this the 5,200 mark. Watch that this week, see what it does, see if it continues to hold that. But again, you have a lot of resistance coming up here. You want it back over that 2,700 mark. But we have to, again, there's just a lot going on right now. A lot of, you got Beige Book and FOMC meeting. So there's things that are coming up that we need to trying to get a hold of. Once we get some kind of certainty in that stuff, this market will start ripping up. Individual stocks will definitely start going first. I don't see an all-time high until we get some kind of word from the Fed. UPST, this is one I do really love. It just had great earnings. If we can pop back over this 137 mark, I think this can really do some damage. I want to actually pick some of this up, shares and calls on this one for the longer run here. They've been crushing earnings, doing absolutely phenomenal. Again, they're AI, loan-based company, and Berkshire Hathaway has actually bought into them as well. So just be mindful of that. 140 as I'm watching going in. And again, base is around that 100. It did wick straight out of that 100 mark. Again, good round numbers or good psychological numbers. People buy at those positions. Just be mindful of that. They buy and sell at those positions. So again, we're hitting resistance, but if we can break that 140, I think we got a solid run to possibly 200 at that point. There is some small resistance, but again, I think we can make a pretty strong shot to 200 moving forward. SQ, I think what really helped this one and really why I like this one is that they had great earnings. A lot of people, I think, were concerned about them. Even I was concerned. That's why we had massive selling. But this has taken quite a haircut since then. So if we could get a pullback to at least the 110 mark coming into this week, again, I think we'll see some sort of chop and stuff going into Wednesday. Might even get some depending on what happens Wednesday, we could even get some possibly selling to retest this bottom. But I think we are pretty solid. I want to grab some Square as well. Again, their earnings have kind of shown me that they're getting it back on track again with everything going on. And now that Jack Dorsey is 100% on Square, I think that is definitely a very positive sentiment. So definitely one I want to watch. Again, we are very bottom levels. So to consider going lower, I'll wait to see that. But I think if you're slowly buying in, you should be perfectly okay. But again, not financial advice. ASML, another big one I do like. Why I like ASML is because that it sells off. Chips that sell quick are AMC and typically NVIDIA. But ASML holds up very well and slowly pushes up. So it looks like we're starting to break back above this 660 mark. If we can hold above that, I think it would be a very positive sentiment and very bullish, in my opinion. But then we have that that psychological number of 700. If we can break that, and then I think we can start heading back to all-time highs. But I really do like Asml. Very strong company, did very well on earnings and continuing forward. So I want to keep this one on watch this week. Again, we're at a point where things are going to start churning. So it's just buying those good companies going forward. And LRCX is another one of those. Same sentiment. It's been holding essentially that 552 mark very well. It's actually been consolidating very well here, which is something I do like. Now moving forward, I think this company could be underpriced compared to a lot of other chip companies. So I think could get a nice run here. I want to pick some of this up moving forward. Again, your essentially top range has been that 600. So you're bouncing between essentially that we'll go 550 to 600. If you can catch this on the bottom of that 550, would be fantastic. And then start writing this back up to all-time highs. I think again by the end of the year we're going to be at all-time highs on everything. Again, we're going to recover these massive correction that we've had to try to price in the Fed rate increases. Roblox is another big one. I think everybody needs to watch. I do really like Roblox. It took quite again another haircut since everything that's been going on. And then they got the Med hype here. I think it was what essentially created this move. But ultimately, I understand. I think they're still a very good company. And I still very much believe in Roblox and that they will do extremely well. I think they're, as far as like any kind of metaverse stuff is to be talked about, it has a young client base, and it's got a lot of potential. It already has a lot of the stuff that everybody's looking for in Meta. So again, I know that's kind of just a hot word right now, but I think they're definitely leading the pack on that end. And so you're essentially floating around that 50 mark. So I think it's a good entry point, something I definitely want to keep on watch. I think we could possibly even hit the 73 mark, attempt for that 73 mark coming in. I think a lot of these we're going to start reversing. A lot of these have declined very quickly, so we're looking for that wedge break. So I think we can at least get to that 59 mark, and then watch for the break on the daily here. If we can get a break on the daily, look for the retest, and then start pushing up again. Again, I don't expect this. I expect this to probably actually get back into that 72 range here, and then possibly chop around a little bit, and then start moving back up. Again, things don't go just straight up or straight down. We've had a lot of bad news lately. Mostly just trying to include that rate raise. So that's essentially what all that's been. But that's pretty much what I got. This video is getting really long. I'm trying to provide enough value, enough information for you guys to digest. Understand you have to be flexible in this market. Always be flexible. Even now, you're seeing it. You know, there's been a lot of just buy the dip for the past year and a half. This is the normal market. This volatility like this. This is what I am used to, as opposed to what we've seen where it's just buy the dip and things just go straight up. You're going to get pops and drops. That's typically what happens in normal markets. Not quite big moves like this. I think a lot of retail traders have kind of made these moves bigger than what they originally were. But just understand that this is normal. Have a longer frame of vision on things, not just short term. But you definitely have to be mindful and nimble during these times. So if you made this far, thank you, and smash that like button. Until next time, I'll see you guys later.